And what we do see is that week after week, these companies keep announcing new deals with AI companies, hyperscalers. We've seen at least 4 Bitcoin miners announce close to $1 billion revenue deals to transfer their energy to power AI.
현재 대형 비트코인 채굴 기업들이 AI 기업들과 새로운 전략 파트너십을 계속 발표하고 있으며 향후에 비트코인 채굴 기업들이 AI 산업 에너지를 공급하는 중요한 역할을 할 것이라고 주장하고 있는 인물은 대형 자산 운용사 바네크의 디지털 자산 책임자 매튜 시겔입니다. 바네크는 크립토 시장에 대해서 그 어떤 기관들보다 선도적이고 혁신적인 스탠스를 취하고 있는 운용사인 만큼 월가 최전방에서 대형 기관의 디지털 자산 책임자가 바라보는 AI 산업과 비트코인 산업의 콜라보레이션 그리고 향후 크립토 시장의 전망에 대한 그의 디테일한 인사이트에 대해서 함께 들어보도록 하겠습니다.
Big Bitcoin miners like Marathon Digital and Riot Platforms lagging far behind the underlying cryptocurrency itself this year, as you can see. But a new report suggests these businesses could be in store for a huge boost thanks to, of all things, here to explain is Matthew Siegel, VanEck's head of digital assets research. This is an interesting development here because usually we talk about underlyings and the miners and things and how these things are supposed to be more high beta, bigger returns. What gives between that relationship with Bitcoin, the underlying, versus the miners?
Yeah, there's been a huge divergence year to date. Bitcoin's now up, say, 35%. These Bitcoin miners are essentially flat. So typically they are the higher beta plays on Bitcoin. And in the latest downdraft, they sold off quite a bit. And we think the market's missing a pretty strong underlying fundamentals.
Why? Why have they been selling off?
Just lack of interest, high beta, the unwind of the carry trade, like nothing specific that has to do with the Bitcoin miners that we can see. And what we do see is that week after week, these companies keep announcing new deals with AI companies, hyperscalers. We've seen at least 4 Bitcoin miners announce close to $1 billion revenue deals to transfer their energy to power AI, right? So we know that GPUs take about twice the power as CPUs, and we know that it takes about 4 years right now to connect to the grid in many locations. These miners have grid connections, and with a little bit of capex in some of these locations, they can repurpose these facilities in less than 1 year. The time value of that money, bringing that capacity on 3 years earlier, is huge. And these are typically companies with, I have to say it, bad balance sheets, either lots of debt and they all went bankrupt last cycle, or just continually issuing equity at the market. What these AI bids are doing is lowering the cost of capital and providing a more sustainable financing stream for these companies. So on our numbers, if they were to repurpose just 20% of their electrical capacity, we think the stocks can double with no change in the Bitcoin mining profits. So the numbers look very compelling.
All right, Matthew, help me with this. We just spent some time talking about the GDX. So that's the ETF that you guys are the issuer of, okay? That's the gold miners. And so when we talk about gold also, you know, we've had this huge move in the dollar lower, which I know 4% doesn't sound like a lot in 6 weeks or so. It's a big move. We've seen gold make new incremental highs while the dollar's been making, you know, relative lows over the last few months. But one thing that's not participating in this move is Bitcoin right now. So, you know, it's had a series of lower highs, a series of lower lows. How do you explain that disconnect between what gold's doing right now and the way that Bitcoin's been acting over the last couple of months?
Yeah, so a few factors are at play. One is the unwind of various carry trades and growth, which has been struggling a little bit. And when you look at Bitcoin's correlation with the NASDAQ, it's at a 2-year high. It's well below the highs that we had in kind of late 2022, but it's a 2-year high. The second reason is there are forced sellers in the market. The German government has sold all of its Bitcoin, $2 billion worth. The U.S. government is selling Silk Road-related coins. There are 2 major bankruptcies where creditors have just been paid out. That's Mt. Gox and Genesis. So with all this forced selling behind us, and this is a typical seasonal pattern where Bitcoin tends to struggle in the kind of 1 to 3 months after the halving, which was in April, and right pre-election, as the market comes to grips with whatever candidate wins, we're in for 4 more years of reckless fiscal policy. The history is that Bitcoin really hits its stride at that point. So we're buyers here. We think it recovers.
So can you connect the dots for us right now? Given everything you've said, the AI trade on this particular move is linked to the power usage and the conversion factor and how to actually make that work. I would argue if you look at a stock like NextEra Energy on the utility side, that has been a derivative AI play as well on this. How do you connect those dots simply about the AI trade versus the Bitcoin miners?
The data center companies are trading at north of 30 times, $30 million per megawatt of electrical capacity that they control. $30 million. The Bitcoin miners are trading at $3 million. So now it's not a complete one-for-one transition. They need to find customers. They need to buy the GPUs or have someone else buy the GPUs and install them. But there is an enormous arbitrage. And the companies that have been most aggressive on this year to date, Core Scientific, TeraWulf, Iris Energy, those are the stocks that have outperformed. We just had another one after the bell at 4 p.m. today, BTBT. Our hunch is that as more of these Bitcoin miners make these announcements, those will be the stocks that outperform because it brings their cost of capital down.